Imagine waking up to see your SpaceX investment nearly halved in just 6 weeks. That's the reality for many investors after SpaceX, the most hyped IPO in US history, crashed by almost 50% from its peak. Over $1 trillion in value vanished, leaving everyone stunned. In this video, we'll break down exactly what happened, why it happened, and what it means for your money. Let's start by rewinding to the day SpaceX made its historic debut on the Nasdaq. June 12, 2026, SpaceX went public in what became the largest IPO in US history. The company raised a staggering $75 billion, backed by 18 major banks. Analysts everywhere were calling it the superhighway to the stars, and excitement was off the charts. Within just 3 days, the stock price soared to $225 per share. Retail investors, hedge funds, and big institutions all rushed to get a piece of the action. Seemed like nothing could go wrong. The excitement didn't last. Just 6 weeks after the IPO, SpaceX's stock price had crashed to $113, a staggering 49% drop from its peak. Investors who bought in early were suddenly facing massive losses. The question on everyone's mind: how did such a celebrated company fall so fast? To understand, we need to look at the three main reasons behind this dramatic crash. First reason is something called a lockup expiry. When a company goes public, insiders and employees can't sell their shares right away. Their shares are locked for a certain period. For SpaceX, this lockup is set to expire on August 6th. On that day, up to 911 million new shares could flood the market. More supply usually means lower prices, and investors are already nervous about what's coming. Second reason is SpaceX's recent acquisition of an AI company called Cursor. This deal happened just before the lockup expiry, and it means even more shares could hit the market soon. Plus, the AI sector itself has been struggling lately, adding extra pressure on SpaceX's stock. The combination of more shares and a weak AI market created a double whammy for investors. Third reason is the delay of SpaceX's Starship Flight 13 launch. Elon Musk himself tweeted that 2 engines needed to be replaced, causing the mission to be postponed. For investors, this raised serious questions about reliability. When a company's future value depends on successful missions, even a single delay can shake confidence and send the stock tumbling. After these events, SpaceX's stock fell below its IPO price of $135 for the first time. This was a huge psychological blow for investors, many of whom believed the stock would only go up. The rapid fall served as a harsh reminder that even the most hyped companies are not immune to market realities. Even after the crash, SpaceX's market value at $113 per share is still a staggering $1.5 trillion. That's more than most companies ever dream of reaching. However, there's a catch: SpaceX is not yet profitable. The company is losing billions every year, and that's making investors nervous about the future. One bright spot for SpaceX has been Starlink, its satellite internet service. The number of customers is growing, but there's a problem: revenue per customer is falling. In 2023, Starlink charged $99 per month, but now it's down to $66. Growth is happening, but profits are still a distant goal. While most investors lost money, those who bet against SpaceX, known as short sellers, made a fortune. During the crash, short sellers pocketed $15.5 billion in profits. This shows that in the stock market there are always winners and losers, no matter how big or famous the company. With the stock down nearly 50%, some investors are wondering if now is the time to buy. The honest answer is, it depends. If the upcoming Starship launch is successful and the August 6th lockup doesn't trigger a massive sell-off, there could be a short-term bounce, but the risks are still very high. It's worth noting that Google holds a $94 billion stake in SpaceX. This shows that some of the world's biggest players still believe in the company's long-term potential. However, even big investors can be wrong, and the current situation remains uncertain. SpaceX's IPO was celebrated as a once-in-a-generation event, but the last 6 weeks have shown that hype is not a business model. Real value comes from profits and execution, not just excitement and headlines. Investors are learning this lesson the hard way. Looking ahead, all eyes are on 2 key events: the August 6th lockup expiry and the next Starship launch. These will be critical in determining whether SpaceX's stock can recover or if more pain is ahead. Investors should watch these dates closely before making any big decisions. The SpaceX crash is a powerful reminder that even the most exciting companies can face setbacks. It's important to look beyond the headlines and understand the real risks before investing. Diversification and patience are key to surviving market turbulence. Market psychology plays a huge role in stock movements. When everyone is optimistic, prices can soar, but when fear sets in, even strong companies can see their stocks tumble. The SpaceX crash shows how quickly sentiment can change and why it's important to stay level-headed. Timing can make or break your investment returns. Those who bought SpaceX at the peak are facing big losses, while those who waited might have a better entry point. It's a reminder that patience and careful analysis are just as important as picking the right stock. If you're considering investing in SpaceX, keep a close eye on August 6th and the next Starship launch. These events could trigger big moves in the stock, either up or down. Waiting for more information can help you make a smarter decision. SpaceX remains a risky bet, especially in the short term. It's not the time to put your life savings on the line. Consider your risk tolerance and financial goals before making any moves. Sometimes the best action is to wait and watch. The SpaceX story is a classic example of how hype can drive markets, sometimes to unsustainable levels. While excitement can create opportunities, it can also lead to painful corrections. Always separate the story from the substance before investing. Just 6 weeks, SpaceX went from the most celebrated IPO in history to a cautionary tale about market risk. The lessons are clear: do your research, understand the risks, and don't get swept away by hype. The story isn't over yet. Keep watching for what happens next, especially around August 6th and the next Starship launch. Stay informed, stay patient, and invest wisely.